Good evening, everyone. Today is Tuesday, March 7th. It is 9 p.m. Here we are getting started again with Dividend Stock Talk, where we talk about investing in dividend stocks for monthly cash flow. Now, we've been doing this for a while, and we've been doing rather well. I'm here to answer any questions. I'm here to show you what I do. I'm going to show you what you could do, but I'm not going to tell you what to do. Can't really do that, but I can show you what I'm going to do. All right, so like I said, today is March 7th, 2017, at 9 p.m. We do this every Tuesday and every Thursday. We're probably going to look into doing more shows during the week, probably on Facebook or YouTube. We'll have to figure that out as we go. I'm not 100% sure how we're going to do it, but practice makes perfect, and perfect practice makes us better than what we are. Who knows? Anyway, let's move on. So today is the 7th, and we like to invest in stocks 10 trading days away. So if you take today's date, which is the 7th, 10 days from today is the 21st. So the 21st of March, we have 12 companies. Okay? ACSF, which is American Capital Senior Floating Limited, paying a whopping 9 cents per share for a dividend. Don't know about you, but 9 cents doesn't really thrill me. CCMP, Cabot Microelectronics Corporation. They're paying a dividend of 20 cents. Not bad, I can live with that. CPTA, Capitala Finance Corporation, paying 13 cents. Here you have the announcement date. They announced this on January. So I'm going to just go over a few things. The 4 important dates you need to remember. One is the announcement date. That's when they tell everyone what they're paying out as a dividend. The second date is the EX date, or the EX dividend date. That is the last day the stock trades before the dividend is paid out. Now, if you want to qualify for the dividend, that means if you want to collect when the dividend checks, you have to own the stock, buy the stock, before the EX date. So today's EX date was 21st. Well, for CPTA is March 21st. Right there. So you have to buy the stock before the 21st in order to be eligible for that 13-cent dividend. It's not a lot of money, granted. However, we created the software using some interesting algorithms and some interesting math and some interesting detailed information from the data streams, and we came up with a software that shows you how the stock has performed in the past and gives us a good idea of what's going to happen in the future. Because if the stock does the same thing year after year after year right around the same date, there's a good possibility that it's going to continue doing the exact same thing. Is it guaranteed? No, it's not guaranteed, but there's a good possibility. So if you have everything pointing in one direction, saying that the stock is going to perform a certain way, because it did for the last 10 years in a row, there's a good possibility it will do it for the 11th year. So software telling us what's going to happen it gives us insight on what to do next. Okay, so the third date, remember there's 4 dates you got to remember. Announcement date, the EX date, the date of record, or the record date. Okay, the date of record. Now, that's exactly what it sounds like, the date of record. That's when they actually go to the books and write down or record who is the owner on that day. Date of record. Kind of like a giveaway. Date of record. Okay, so if you own the stock on that day and you pass what is called the settlement period, which means you have to own the stock for a minimum of 2 days to get through the settlement period. That's why you have to buy before the EX date. Because you notice here the EX date is the 21st and the date of record is the 23rd. What does that tell you? There's a 2-day difference between the two. Okay, 2-day settlement period, or some. I think they're moving up to a 3-day settlement period. I'm not quite sure what the new legislation is going to be. But you have to buy it before the EX date in order to own it for the minimum 2 or 3 days going into the date of record. All right. The fourth date is the payable date. And that, exactly what it says. Payable date. That's when they actually write the check. Send the money out to whoever owns it. All right, so Capitala Finance Corporation. GARS, that's Garrison Capital Incorporated. They're paying out a 28-cent dividend. GTY, Getty Realty. KFY, Corn Ferry International. LTC Properties. LVS, Las Vegas Sands Corporation. It's one of my favorite stocks. MED, Medfast Incorporated. Paying out 32-cent dividend, not bad. SLRC, Solar Capital Limited, paying out 40 cents. SRE, Sempra Energy. And SUNS, S-U-N, is Solar Senior Capital. Now that, different. Solar might give you an idea that it has something to do with solar energy. I mean, that's what leads me to believe. But senior capital kind of makes me think it's a bank or some kind of finance company. Whatever, don't know. And I feel bad about saying this. I don't really care. I don't really care what the company does. The only thing I care about is that paying a dividend and it's over 10 cents because I don't want to chase anything below 10 cents. It's not worth my time and effort. That's number one. Number two is how well have they performed in the past and how often do they increase their dividend payments? I mean, am I going to buy solar senior capital, find out that next year I'm getting less money from owning my stocks? Do I really want to buy it and own it? No. So a few things I want to know. Number one is how good of a company are they? Where do they rank? How often have they increased their dividend payments? What percentage of return am I getting on my money? Am I investing my money and only getting a 1% return? Come on, really? I can put it in a bank and get better rates on a CD. So I want to make sure the rate of return I'm getting is good enough. That they have a good quality, historic patterns of paying and increasing in value. So we're going to get a little bit into that a little bit further as we go. All right, so I said that today is the 16th. So these 12 companies here, they went EX. Wait a minute. They're going EX in 10 days. Okay, so we can buy them anywhere between now, which would be tomorrow, which would be the 8th, all the way up to the 20th. Because I believe if we buy them on the 21st, we don't really qualify for the dividends. Okay, so that's them. Let's, for the fun of it, look at who paid out today and see how they reacted. Okay, so the 23rd, the 7th, which is today's date, there's 23 companies. Okay, and here they are. Let's go to the size of the dividends because I don't like to invest in anything below 10 cents. So GIL, RYG, RLGY, NEM, and PJT, they just don't cut the mustard, so I'm not even going to bother looking at those guys. But look at it, all these here. That would be 19 companies to take a look at. HD, I believe that's Home Depot. That, I'm pretty sure, is a dividend king. HD. In 10 days from yesterday, because yesterday was the day I had would have had to have gotten out. Let's count. Okay, today is the EX date, so yesterday would have been out yesterday. So that's day number 10. 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, so I would have gotten in on, that wasn't it. All right, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Yeah, right here. All right. Now, we're looking for 89 cents. 89 cents is not a whole hell of a lot. Home Depot is at 146. Now look at these numbers right up here. O stands for open, H is for high, L is for low, and C is for close. Okay? We're basically going to be looking at the opening price on the day 10 days prior from yesterday. Because you would have wanted to get out of the stock yesterday, you would not want to carry it into today. Okay, it's always 10 days prior to the EX date. The EX date was today, okay, which is the 7th of March. So 10 days prior to today is right here. Okay, so it opened up at 145.60. See that number right here? This number right there. Okay, I put the cursor over here because this is the date. 145.60. And 89 cents on top of 145.60 is probably 146.49. Okay, so our target price is 146.49. Did it make it the first day? No, it didn't. Now we're going to look at the high right there. Okay, we're looking at 146.49. Second day? No. Third day, 146.33 was the high for the third day. Okay, didn't make it there either. Fourth day, didn't make it. Fifth day, didn't make it. Sixth day, didn't make it. Seventh day, there we go. We would gapped up at 146.72. So she opened above the 146.49. Okay, so we would have been called out 6 days in. Or was that 7 days? I don't know, one or the other. 1, 2, 3, 4, 5, 6, 7. Yeah, on the 7th day, we would have made our target price. All right, so that one actually made it. Now, LANC, HD is Home Depot, yeah. Oh, LANC is Lancaster Colony Corporation. Let's take a look at Lancaster Colony. LANC. Oh, we didn't check the date. Darn it. All right, look at 10 days prior to 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. It's right here. All right, there's my 10 days. All right, so we're looking just for 55 cents. She opens up at 132.98. Looking for 55 cents. So 132.98 and 55 cents is, what's that? 133.53. Okay, and the high of the day was 135.39. So we're definitely out on the very first day. Love it. Gotta love it. And that is the 21st. So if we keep track of the 21st, we don't have to keep counting 10 days. All right, so let's go to the next one, OMC. OMC. And who is OMC? OMC is Omnicom Group. Sorry, never heard of them. Omnicom. Basically going sideways for the day. Let's quickly go over what's done in the last year. Okay, so a year ago, Omnicom was at 78. Okay, 78, she bounces up in a couple of months to 85, drops back down to 76, jumps back up to 85 again, drops back down to 80, jumps back up. It's basically going sideways, staying in that nice little range. So the last 90 days, this thing has been going in a range anywhere between 84 and 86. It's a nice tight little range. We're going to go 10 days, which was the 21st. All right. Nope. 21st. Okay, so that's my 10 days, the 21st. Okay, so OMC, Omnicom, we're looking for 55 cents. She opens up at 85.30. So 55 cents on top of 85.30 is going to be 85.85. Hey, interesting number, 85.85. The high of the day was 85.93, so you're in and out on the exact same day. I love it when you're in and out in one day, because that way, next day you can do the same thing over again. Okay, so Home Depot was out in 6 days, 7 days. LANC was 1 day. OMC is another 1 day. WR is Westar Energy. They got a 40-cent dividend, and that was WR. Here we go. WR starts the year out way down here at 43. Okay, within 2 or 3 months, she jumps up to 52. And for no reason whatsoever, or at least not that I know of, there's probably a reason somewhere, she jumps from 52 up to 56. And then from 56, for the rest of the year, she goes sideways. And right around the beginning of the year, she drops back down to 52, and she settled in at 54 at the moment. Okay, so we don't even have to look at this one, because here we are on the 21st over here, which is 10 days prior to today, looking at 40 cents. She opens up at 53.05, And the high of the day of that day was 53.35. So you're not out on the first day. However, the second day, the high of the day was 53.45. Okay, so we're in at 53.05, and 40 cents would be 53.45. So the second day, the high of the day is 53.45. Now, does that mean you're going to be called out just because you have, a limit order of 53.45? Just because it hit it doesn't mean it's going to hit it and stay there for the whole day. No, it hit it, and who knows how long it's going to stay there. It may stay there for a second. It may stay there for an hour. It may stay there all day. But anyway, it hit the high of 53.45, so I'm going to make the assumption that it didn't get called out. Possibility that it could have, but let's say that it didn't. All right, so 1 day, 2 days, 3 days. Day 4, you're out because day 4 hit a high of 54.06, which was more than your target price. All right, look at ENH, and who are they? They hit Endurance Specialty Holdings. Okay, so Endurance Specialty Holdings, ENH, 38 cents. Let's see what they do in the 10 days. ENH. Okay, now ENH, this is an interesting looking chart. ENH starts the year at 63.73. Now, this thing goes from March all the way to October. Okay? October 3rd, October 4th to be exact. Okay, she opened up at $65.11. $65.11 she opened up. And for some strange reason, she made a high of $88.98. That is 23, almost 24 points, which is very close to a 50% increase in one day. That's unheard of. Why did it do that? I don't know. I don't care. I just want to know how she reacted the last 30 days. You're looking at the 21st. Here's the 21st right here, which is the last 10 days. Say 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so she opens up at 92.84. We're only looking for 38 cents. So 38 cents would be 93.13. Is that right? 92.84. No, 93.14. No, 93.12. All right, 93.12. Okay, so that's what we're looking for, 93.12. Make it the first day, nope. Second day, nope. Made a high of 92.89. Third day, 93.31. So you're out in the third day. Ooh, there you go. So Home Depot, 6 days. LNC, 1 day, 4 days, 3 days. I can keep going on, but for the most part, Texas Pacific Land Trust. Got a dividend of 35 cents. TPL. Let's see what they look like. TPL. All right. $297 stock. She starts out the year at 146. Goes sideways for a couple of months. Right up into the middle of May. Then a slow increase right up until September 7th. The first week of September. She's at 178, which is, it's a decent increase. Not huge. But from September 7th to the beginning of the year, she goes from 177 up to 300. It's a $130 increase. That's like an 80% increase in a 4-month period. Why is that? Okay, for the year, she makes a high of 135. That is almost a 100% increase in the 5-6 months. Crazy. Okay, from 335, she settles back down to where she is now at 297. Let's go to the 21st. All right, 21st. She opens up at 304, and the high was 304.83. So this is one that didn't make it. So let's take a quick look at the software that I created and find out if we would have gotten into this one at all anyway. Now, I personally wouldn't have, because I don't do stocks that are $200, because I just don't like buying that kind of stock. Alrighty, we need to get that stock symbol. TPL. Alright. TPL. And it's 10 day. Oh, actually it's today. So let's plot the dividend. Let's look at the average. Oh, okay. Well, although the numbers look good right here, look at these numbers: 2016, 15, 14, 13, all the way down to 2007. One's all the way down. You got a 3 and a 4. You know, those numbers I can deal with. This I cannot deal with. Okay, had a closing of had closing price of 298. The high of the year was 336, and the low was 142. That's huge. The dividend is $1.35. Love this nice dividend. But however, look at this right here. The yield is 0.12. That's not even a 0.5%. That's 0.1%. That definitely ain't worth getting. And the volume. Check out the volume. 10,000 shares for the day. Not even worth my time and effort. No thanks. I wouldn't have got into this one. For the fun of it, let's take a look at the 10-year chart over at Yahoo Finance and see what that looks like. Okay, already the volume's not working for us and the yield's not working for us. But the growth is. And, 10 years ago, we could have got this stock at $45, and now it's at almost $300. Wow. Okay, so something ain't stirring the Kool-Aid. Why is this stock going from $45 all the way up to $297, almost $300 in a 10-year period? Okay, that is a nice rate of return. However, look at the dividends. They pay out like once a year. You know, pay out 17. Yeah, it looks like they pay out once a year. Not something I want to get into. Anyway, the rate of return is not what I'm looking for, so this is something I'm just going to pass on. So no, I would not have gotten this stock, even though the growth rate is great. You know, if I bought it, 10 days ago, where's it going to go from here? It's like an all-time high 10 days ago. No thanks. I'm going to pass. All right, so let's get out of that. All right, we would not have done that stock, so let's move back to where we were. All right, MNDO. Who is MNDO? Mind. Mind CTI Limited. Mind or Mind? Or Mindo? MNDO. Mind. Oh, I have no idea what these people do. MNDO. They're offering a 32-cent dividend. Okay, she starts out the year at $2.11. Wow. She starts out at $2.11, and she's at $2. And the high of the year is $2.90. This is not something I'd get into. Okay, just for the fun of it, let's see what they're doing. MNDO. MNDO. Okay, so last year they didn't make it. 2013 didn't make it. 2012 they didn't make it. 2008 they didn't make it. So right there is your answer. Ain't for me. All right. Look at the dividend. The high for the year is $294. She closed at $289. That's too close to the high for me. And the low of the year is $196. The dividend is 32 cents. It was 11% yield and not even 500,000 shares. So this is a definite no. OA. Orbital ATK Incorporated. What does OA do? I don't know. OA. Okay, so OA is offering a 32-cent dividend. Starts the year out last year at $80.73. Goes sideways for a bit, making a high in June at 90. Get some profit taking, then a drop. This is a drop like a rock. She goes from 87 all the way down to 73. That's a $15 drop. Goes sideways for 3 or 4 months. Then jumps up right around election time. 74 up to 86, like a $10 move. Goes sideways for a bit. Now she's got a high of $94, $95. All right, $95.18 is the high. All right, she's at $94.56 at the moment. Is there room for 32-cent move? All right, well, let's check the 21st and see what she did. Okay, so the 21st, she opened up at 89.49. And at 32 cents, 89.49 is 89.81, I think. But she made it 91.30, so she definitely made it in the first day. CNS is Cohen and Stearns. They're offering a 28-cent dividend. Let's see what Cohen and Stearns actually does. CNS, Cohen and Stearns. All right, so Cohen and Stearns starts the year out at $33. She drops from the first 2 weeks down to 32, and then from 32 she jumps up within 2 months up to 42. That's like a 30% increase in 2 months. Okay, that's not bad. She drops back down, goes up again, and makes a high of the year at 43.85, goes sideways, and then right around October 4th, October 3rd, October 4th, so in the beginning of October, she drops from 42.84 all the way down to 33. Now from 33 in November, she goes sideways, and we're at 37 today. So let's look at what did she do for the last month. Nice little upswing. And from the 21st, we're looking for that 28 cents. The 21st, she opens up at 36.13. Yeah, the 20 cents, 28 cents on that, and that's 41. So it's 36.41, which makes it in the very first day. Gotta love it. All right, so what we do is we go, we look at today's date, which is the 7th. All right. And then we're going to look 10 days into the future. That's the 21st. The 21st is 12 companies. So here they are, the 12 companies that we're looking at. Now, we're not going to look at the last two, KFY and ACSF, because they're below 10 cents. We might do KFY because, 10 cents is not that bad. Corn Ferry International. What did they do? I don't know. And guess what? I don't really care. Why don't I care? I'll tell you what I care about. KFY, enter that in. Okay, this is what I want to look at. I want to look at what the chart looks like. KFY starts the year out at 27.78. It's a big spread between 31, which is close to the high, and the low of 18, which is the low of the year, which was back in the end of June. Okay, right around election time, she goes from 19 and jumps up to 30, from 19 to 30, which is $11 move within a month, right, because of the election. From that, she basically went sideways. Right now, she's settling in at 31.04. and it only has a 10-cent dividend. Would we be looking at that one? Probably, because we're looking at getting in sometime tomorrow, if we were going to do this one, at 31.04, somewhere in that area. And we'd be looking at a high of 31.14, 31.15, somewhere in that area. And she made the high of the year at the 32.07. So there's plenty of space between the high of the year and where she is now. And we're only looking for a 10-cent dividend. So get in, grab the dividend, get back out. But before we make that decision, let's plug it into the software. The only way you can get access to the software is to actually be a member. And what was it, KFY? I believe it was. Yeah, KFY. Okay. KFY. And the dividend is 7 days from today. 10 days from today, which is the 21st. Okay, and let's plot the dividend. Here we go. All right, so most likely we're not going to do KFY because they only have 2 years worth of data. And they're only offering a 1.25% yield, and the average volume is only a little less than 500,000. So we really can't judge which direction this company is going to go, so we're going to end up passing on this one. All right, now I'm not going to plug in all the rest of them because there's quite a bit to go, and I really need you guys to actually do some of your own homework. But I'm showing you what I'm going to do. Now let's just pick out one more. Let's pick out Med to try that one. Medifast Incorporated. Now I'm not picking them for any reason. I'm just slide them up and say, all right, let's do Med. I'm not cherry picking. MED. Let's see what they look. Whoa, that is a nice looking chart. I love when it looks like that. Okay, so Med starts out the year at 30.78. Goes sideways for a couple of days, then drops to the low of the year for 27.87. That's the low of the year. From there, this thing is basically, it's a pretty looking chart. The way I mean by pretty is it looks normal, good growth rate chart. You have going up for a couple of weeks, and then you have your profit taking. Going up for a week or so, profit taking. Going up for a week or so, profit taking, going up, profit taking, going up, profit taking, going up, profit taking, going up. And it's consistent throughout the whole year. So she makes the high of the year at 46, which was just the other day on March 2nd. Okay, and this thing looks very good. So we're only looking for 32 cents. She's at 44.80 at the moment. Okay, so at 44.80, we add 32 cents to that. Looking at 45 to 12, somewhere around that area. Looking at 45.12. Now, can it make 45.12? Sure, why not? And 45.12 is almost right here into their resistance level, or the latest resistance level, which would be somewhere around 44.77, or even go down as low as 43. But still, even at 43, I wouldn't mind owning it at that price. Okay, so there's a lot of space between where it is now and the high of the year. If it was any higher, we probably would say no, but we're only looking for 32 cents. So that one looks pretty good. And let's plug it into the software to see exactly how MED looks. Okay. So we're going to leave the date in there because that's the correct date. I'm going to put MED, and we're going to plot the dividend. All right, so no on MED because it only has 1 year worth of data. How the heck did that happen? Okay, so no on MED. So I'm going to try one so I can at least show you one. MED is not going to all right. Las Vegas, that one's been around for a while. Las Vegas Sands, I've actually done this one plenty of times. LVS. Okay, so LVS, interesting looking chart. Starts out the year at 50.69. Sideways for a little bit for some strange reason. She drops from 52 down to 47 already on the third week of April. Continues on downward, makes a low of the year at 41.57. And then from there, shoots up, and right towards the end of November, hits the high of the year 63. Now there's quite a bit of profit taken from the high of the year to where we are today, because right at this moment in time we're at 54.30. Now they're offering a 73-cent dividend, and she's at 54.30 at the moment. So that looks, the chart looks good. So it looks like it has plenty of space to add the dividend onto where we're looking at without being out of range, and without being too high and without being too low. So let's quickly plug it in to our software. LVS. All right. Now, LVS only has 5 years worth of data. I wonder why that is. Ooh, nice numbers. Now, LVS, you'd be holding an average of 7 days. So we had 2012 1 day, 13 2, 14 1, 15. That's 4 weeks. That's a month. Holding on to a month to hit your target. I don't know. All right, 16 for a week and a half. Average of 7 days. That's a week and a half. I don't know. I can hold a week and a half in order to make a 72-cent dividend off of this company. But from what it looks like, if we buy it 10 days prior, it looks like we're better off holding and waiting to go 5 or 6 days prior. So we'll buy it at the end of next week. That way, there's a good possibility we'll be able to hit that score that we're looking at. Okay, so let's check the chart and see what Vegas has done for us over the last 10 years. All right. Now this, I might want to pass on only because, check this out. 10 years ago, this thing was at 85. Now, everything dropped in 08, 09, so we really can't fault them from that. However, holy cow, she dropped all the way down to $3 in 09? Nice. Okay, so from $3, she made a high in February 2014 at $85, and now she's at $54. So this one, I'm sorry for this, guys. I personally would pass on this one also. 10 years ago, she's at 85, and now she's at 54. Even though she's saying down in 09, like everything else, down to $3, and she's at 84 today. 54 today, sorry. She's at 54 today. I don't know. Toss up. Not enough history for me, number one. Number two, as of 2010 to 2017, that's 7 years. This thing's been basically going sideways. Okay, so 7 years ago, I could have got it for $50. Now she's at 54. I'm going to pass on this one. Sorry. And I wanted to give you one, too. So let's get out of this one. I want to give you at least one. So let's go back to, I'll try SRE. That's the top on the list. Sempra Energy. Now, energy stock is a good stock. Because everybody needs energy. So let's look at SRE, see what they look like. SRE. Okay. So SRE starts the year out at 97.53. She makes a jump up to 100, goes sideways for a little bit, and then right in the end of May, she shoots up to 114. Gets you a lot of profit taken. And then September, she's right back down at 100 again, the $100 area. Going sideways, makes it drop to the low of the year in November, right around election time, to 94. Then from 94, she's right back up to where we are today, which is 110. And actually it looks nice growth from 110. And we're looking at 82-cent dividend. There's a lot of space for 82-cent dividend for this company, because as you remember, she's at 110 now, and the high of the year was at 114. So there's plenty of space to make that 82 cents. Okay, so that chart looks good. Those numbers look good. And let's plug in SRE into the software. Alrighty, so we're back on this page here. SRE. Whoops. SRE. Let's see what the software tells us to do. And there we go. We have nice. That looks good. We got 1s, 2s, 4s. We got an average of the last 10 years at 2.7. So for 3 days, it looks like. Let's get rid of the average line. I mean, the blue line. Okay. Now, the way it looks, we buy 10 days prior to the EX date. Now, the EX date is represented by these red dots on this black line here. So if we go to the left of that, that's 10 days prior to. Okay, see how that little box opens up? -10, which is 10 days prior to the EX date. All right, and then from there, the stock usually moves up. Follow the line, see that? And usually 2 days before it makes its high. Now this is compiled over the last 10 years. So if you take your cursor and you hover it over these numbers here, they light up a little darker gray, but if you really want to see them, just click on them. All right, that's 2007, that's 2008, 2009, so on and so forth, all the way down the line. Okay, so that all looks good. The numbers look good. All right, it closed at 109. The high of the year was 114. The low of the year was 92. It's offering a 75-cent dividend, which is a 3% yield, and 1.1 million shares in float on an average basis. Okay, so this chart looks great. Now let's take it to the 10-year chart on Yahoo Finance. Now, this could be the clincher because you never know, because we have two things going for us at the moment. And that is a definite yes. Look at all the dividends they've been paying out. Those great. See all these little D's down here? That looks great. Now, 10 years ago, come on, this thing's at 61. All right? 61 10 years ago, and today she's at 110. That's almost a 100% increase. Everything makes its low in 09 at 43. Now from 43, nothing but up growth. Granted, she's been going sideways for the last few years, but hey, everything looks great. So SRE is one we're going to look at. And let's throw it into SRE, into the second piece of software that we made, SRE. Oh, sorry, I hit the wrong button. That's funny. SRE. I hit reset rather than go. Okay, average 2.8, all the same numbers. 900,000, that's still close to $1 million. So everything looks good. I go here, and that goes right back to the same software. So everything looks good in that one. And let's look at SRE. SRE. Now, 10 days of the option on SRE is at 110. That's only a $5 move. Okay, that's only a 35-cent profit. That ain't even worth my time and effort. All right, let's look at this right here. At the moment, there's 49 calls and 135 puts. That's interesting. Now, this is just the numbers to look at. Percentage of total, 79% are calls and 25% puts. The delta, blah, blah, blah. All this kind of nice, neat, fun stuff. Total. Not very many, now, is there? All right, I want to close this out because that's going to do nothing but confuse people. All right, so that's what we're looking at for the spread. We might not want to do that. We might just want to buy it. And that's going to be tough to call right now because right now it's saying that the bid is 95 and the ask is 112. So to get a more realistic number, I'm going to have to wait during the day tomorrow. So that's what I'm going to do tomorrow. I'm going to leave this one open. And I'm going to take a look at it during trading hours tomorrow to see if this is going to be worth my while. Let's see. Got any questions? If not, we can bug out today. All right, we can bug out today. Now, so this is James signing off, a 10-minute trader, and Dividend Stock Talk, because you guys have any questions about investing in dividend, get your monthly cash flow rolling, and all been great. So you guys have a great day, and we'll see you on Thursday for our talk with options, and that way we'll find out what we're doing for Friday, because Friday options expire again, and we'll be catching out. So you guys have a great time. See you the next time around, and happy trading.